Okay, I think I was stopped out because of bad network. So I think that was a network problem. So like I was saying that currently we can see how the market is moving now. These are the resistance from the resistance and now the support. The support has been broken out. Then the market start moving in a downtrend like this, downtrend. Okay. So in this case, what should you do when you are trading a market like this? When you are trading in such kind of situation, number one, you go to the left side, you draw obvious level, support, resistance. Okay. The market is still moving a sideways. You can still use the trend line here. I will show you how to use the trend line, but the market is still moving in a sideways, and we have so many reversal here, reversal here, reversal here. So if I should take this as the reversal point, let me just say this, and let me shade it so that we know where the market is reversing. So we should have called this a bearish candle or a doji candlestick. So meaning as it should be in below, above, a little bit above the line. Okay. So right now I have drawn my support area, and currently the market is moving towards this support level here. So in this kind of situation, what are you going to do when price reach the support level? Number one, when price reach the support level, the first thing that you need to watch out for is how the structure of the market is doing. Let's just say this is how the market is moving, up and down, up and down, and we have the support area here. What's going on? Okay, so I think the network problem. You mean by drawing the levels? Okay, so I can see right now that the market has admitted some of the resistance level, and it has reversed again. They escaped this support area and now they are heading toward this level. So what I will do next is I will go to the left side. Yeah, I'm coming. I'll go to the left side. I'll look for reversals. These are the reversals I'm talking about. And again, here I need to check out this reversal as well, because I need to know the psychology behind seeing the Jody candlestick and a green here. One, I can see that there was a strong bearish candle and a doji. After a doji, a green candle, meaning that this doji is supposed to be a bearish candle. So in this kind of situation, that means the market should be the line, horizontal line should be a little bit below the doji candlestick, or let me just say a little bit above the doji candlestick, by touching this one as well, by touching all the reversal point here. So that is my area of support right now, because if I say that okay, this candle close at this support area but still no rejection, that means next candle here is supposed to be bearish, but you see a doji. That is why you see a strong bullish candle and the market reversed to the upside. That means this is my support and resistance area. Now what I need to watch out for is, if I want to trade support and resistance area here, I need to look for the market, how the market moves. The market moves like this, up and down, up, down, up, down, up, down, up here. Then there's no strong momentum. There's a strong momentum, but look at how the last candle closed. One, first thing you need to watch out for is check the structure of the market. Is it in a downtrend or is it in an uptrend? This is a downtrend, assuming that the level is here. The market should break this support level before it reverses. But you see, the level is here. It's not like seeing support and resistance in a sideways, but see the structure of the downtrend. It has already crossed this area, so this is the next level that the market should reverse. That is one thing you need to watch out for. Two, look at the candle that will close at the level. how does the candle behave? One thing you need to watch out for is the behavior of the candlestick. You will see that, look at this bearish candle here, is exhausted. This is what we call exhausted candle. This candle is exhausted. And when a candle is exhausted, it means that before it could form a bearish candle like this, it took like for like some seconds to form green body and finally close as red and then reverse. So if it close as red at the last second, that candle is exhausted, it's not strong. Look at the first one here. Look at the first candle. It got rejection, but not at this area. So that is why buyers want to enter because of this rejection. But remember, this is where buyers should enter. This is buyers area where buyers should enter. So that is why we see the buyers try to enter forcefully, and what happened at the last second, the candle formed a red candle here and they close exactly at this area. That is why this candle is should be seen as a weak candle, exhausted candle, tired candle, candle that is tired, that cannot move further. And that is why next candle was bullish because of this area. And if you look at this candle here, this candle has a name, a pin bar, inverted pin bar candle. That is why we see a bullish candle. Okay, so when you are trading support and resistance, if you truly want to be good in trading support and resistance, you don't have to be trading on every candlestick. Make sure you pick a certain level, a certain price turning point, obvious level. This is obvious level, this is obvious level, this is obvious level. If you choose all these obvious level, wait for the market to come to those level and react and know what you should do when market approach the level. You see that again, this candle was also rejected from that same point when sellers tried to go down but rejected from the level, and again buyers entered. Now when buyers entered, sellers again entered. You see this candle did not close at this level, no rejection. That is why we see again, oh, come on man, what's wrong with network? That is why we see again sellers entered. Now when sellers entered, remember the tiredness of this candle, the way it formed red. It took them some seconds before it formed red. Buyers try to enter, that means that time the sellers are exhausted. These are the leftover sellers that enter the market. Now it closed at this support area. That is why we are seeing this bullish candle. Remember, one thing is that this candle closed exactly at this line and it reversed. So buyers enter from this point, but this one closed, all the whole body of this red candle is in between these two horizontal line, and that is why buyers entered very strong. So you should see the difference. This one just closed here and sellers and buyer center. But this one closed, all the body is in between, is inside this area and buyer center. Okay. So that is one thing you need to watch out for. Look at the trend, the way it approached the level. If the market is moving like, let's say this is support area. No. Let me just say this is support area. And the market, let me say this support area. The market is moving like this. Up, down, up, down, up, down, up, down. Then a little bit up, and you see momentum, 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 momentum. They will not respect this level again. That is when the market will not break the level and come back again and reverse. But if you see a downtrend, something like this, down, down, up, let's say this is support area, down, down, up, down, then the market should reverse because these are supports previously and the market has already break the level. So assuming that the support is somewhere here, assuming that the support is somewhere here, if market comes to that same point, it will not reverse. Let me repeat again. This is a support area. The market is moving like this, up, down. Then market will reach the support level and reverse. If market comes to that same level, it's not going to reverse. It's not going to reverse. If you just see like something like a gap up or something, any trends in the market will play with trader, it did not reverse, it will still continue because this is the structure of the market, lower highs and lower low. So the market must break the level before it finally reversed. So it's not going to reverse here. So that is how you trade support and resistance. But when the market is now moving up now, There's no need to trouble yourself. Wait for the price to reach this level or this, or come back to this level. Let me tell you, if you practice this for a whole month, you'll be good in trading support and resistance even without drawing lines. Even without drawing all these lines, you'll be good in trading support. Most of the time, I don't draw lines because when I observe the levels, I will know how the market is going to reverse. So that is why I do trade most of the time. So if you trade like this for a month, try this for a month, and you are good at it. Let me tell you, you don't need to be drawing lines when you are perfect with it. So let's go to next chart and let's check it out. Let's see what's going on. You can also see the moving average is working as support and resistance, but this is not the indicator time. Okay, like I said, first thing that you need to watch out for when you want to trade support and resistance, look at the chart first and look at everything. If I should ask you any question, or if I ask you what are you observing now, is the market moving in a sideways or is the market moving in a trendy movement? If the market is moving a sideways, I think you are wrong. If you say the market is moving a sideways, I think you are wrong. If the market is moving trendy currently now, I think you are right. If the market is moving a sideways, this is what we mean by sideways, chopping up and down, up and down. But if the market is moving trendy, in a trendy form, it will be in a swing high and swing low, swing high, swing lows, lower highs and lower low, or high highs and higher low. That is how the market moves most of the time. But currently, the market is not moving in a sideways. The market might still be using some other previous support horizontal. The market might still be using previous support horizontal level to reverse the market. That is why we are seeing all the reversal. Or it might still be using the trend line. This is when you now come to use the trend line. When you see the current market moving up, this is double bottom. This is higher high, higher low, higher high, higher high, higher low. Then the market is moving upward. So in this kind of situation, how do you draw support and resistance here? That is one thing you need to know. First thing you check out, draw the using the trend line, connect the high, connect the high, then also connect the low. This is the low, connect the high, connect the low. Then you now draw it as the same way you draw this area of support. You see this candle cross it, so it's not valid. Once the price comes to this level, it's going to reverse. So you draw it the way you use two lines here. You see, use the same trend line also as well to use two lines. You clone it, then you drag it to any part, anywhere you see reversal point. Yes, this is the reversal point here. You will clearly see that this candle reversed the market. Here also it reversed inside this area. It reversed. Here also it reversed inside this area. Here also it reversed. Rejection. Here also no rejection. Next candle is supposed to be green, but no green. It reversed. So we have drawn our resistance area. Then also you do the same thing to the support area. You clone it and drag it to any previous support level, any previous turning point here. Okay, so what I did, you will see that the distance here of the support is more than the distance of the resistance. So it doesn't matter if the distance is too far or if the distance, both distance are not the same. It doesn't matter. It depends on how currently the market is moving, the situation of the market. So don't ever judge what is going to happen to both sides should be the same. Which gap are you talking about? If you can, you indicate the gap you are talking about. I think it will be helpful. Okay, so I think we should continue. You see the candle reverse and bias entry, again reverse bias entry, reverse bias entry, and enter again reverse, reverse, reverse. Now you have to wait for price to come to this level and enter your trade, or once price reaches level, you enter your trade. And one thing you need to consider is, yes, one thing you need to consider is the opening price. Assuming that this candle close here, next candle just open. Next candle just open. If this candle close here, next candle open here. Let's say there's a gap and next candle opens here. That is a sign sellers will enter, because a seller just entered immediately at that same resistance. It's just like same thing that happened to card CHF here. This candle close here, next candle opens here. See, there's a gap. Next candle open in between this area. That is why a gray candle is formed. So if the same thing is going to happen to this here, to this level here, that means the market also is reversing from that same point. Now, take note. This candle got rejection and it reversed, but this is not what we mean by valid trading on support and resistance in a good way. How you trade support and resistance area is wait for the price to come in between these two lines, then you enter your trade. Wait for the price to come in between these two lines, then you enter your trade. Remember, I'm not using the horizontal line. I'm not using the horizontal line. Okay, so I'm not using the horizontal line. If I'm using the horizontal line, that means the market should be in the ranging mode. Or if I want to see a breakout and retest, that means I should use the horizontal line. That is when you are trading like a forex trader, like a forex star. So as a forex trader, you trade by breakouts and retest, breakouts and retest, or you trade aggressively, no retest, you just trade aggressively. So that is when you use the horizontal line, including this trend line. But in this case, this is binary option. You are only making use trading on support and resistance area only. Okay, that is when you are seeing market is reversing. All this green turn to red, red turn to green. Market is reversing from areas, but these are the major areas here. The major area is where I have marked out. The major area. We still have some minor area in between these two, in between the market movements here. We still have some minor area, but the major area is what you should focus on. So once the price comes to the point here, then you should know when to enter the trade. Now remember what happened to this one when sellers break the level. You see that this candle break the level and against the buyers he entered, and against from that same point, this candle formed a green candle. Now, when sellers come to that same point, it got rejections and it didn't reverse. Sellers again entered. Now, when sellers entered, no rejection, no rejection from sellers, meaning there's no interest of sellers, buyers at this moment. That is why we see sellers entry. Okay, so wait and see. As this one got rejection, it reversed. Remember the way it happened here. This one got rejection, it did not reverse. Sellers still entered. But you have to trade according to the rules of support and resistance area. Wait for the price to be inside this area before you enter the trade. This one got rejection, it did not reverse. But this one got rejection, it reversed. The next candle was green. Okay. Now you can see that the trend, the downtrend has already started. Minor downtrend. Already we have seen some minor downtrend here. Minor like this one, this is minor downtrend. Here also we are also seeing some minor downtrend here. Minor downtrend here. We are seeing some minor downtrend here. So in this kind of situation, the market is now going down. Now look at what is happening here currently with the price movement. Now the market is going down, and here this candle got rejection, it reversed. But this is not how you trade. Wait for the price to come closer to this level and watch out for the opening price of next candle and closing price of the previous candle. Just look at where this candle closed. A little bit the edge of this candle is exactly at this upper trend line. But next candle open inside this middle, this trend line, these two trend line. Next candle open inside. That is a sign the buyers will enter. That is a sign the buyers will enter. Now, let's see if buyers will continue should continue to this level. I think next candle should be green. So I've extended it to make sure that to know if buyers will continue and close at that area so that you can capture the sellers at that same area as well. Okay, so this candle close here, the edge of the candle is touching this line, and next candle open inside this line, so buyers enter. I think now buyers should continue to this level because we got rejections from sellers at this level. They just like this one, just like this, got rejection from sellers, and next candle supposed to be green, but no sign of sellers, no sign of buyers, no sign of green candle, a doji candlestick. And always remember that when the doji candlestick is forming here, this is how the doji candlestick is forming. We know we have four types of doji candlesticks. We have the we have the plus sign doji candlestick that both the upper and lower rejection are the same length. Even the side, the horizontal level, also the horizontal line, also the left side and the right side are the same. This is plus sign doji. Still have some one like this, very long candle. I think if you want to know about doji, the psychology behind all these doji candles, go and learn how to make use of doji candlestick or doji candlestick. This is, this doji candlestick is different from this. This one we call this long leg doji candlestick. Long leg doji candlestick. This one we call it the plus sign doji candlestick because it looks like plus. Both the upper and lower are the same length, even the sideways, the side, they are the same too. But here, upper and lower they are the same, but it's not the same with the side, the horizontal line, the horizontal level. Sorry, the horizontal body. It's not the same. So we call this long leg doji. Then we still have some doji candlestick like this. We call this the gravestone doji. Gravestone doji. We still have doji candlestick like this. We call this the dragonfly doji. Dragonfly doji. So this gravestone doji is the family of gravestone doji is always most of the time like this, like this. It can be like this. So we call this still gravestone doji. Still the family of gravestone. Something applicable to this dragonfly doji. Dragonfly doji can be like this. A little small wick above can be like this. Let's say a huge small wick above. So dragonfly doji can be like this. Okay. So this one is plus sign doji and this one is long leg doji. This one is gravestone dojis. This one is dragonfly dojis. This one is a flat doji. No up and down, just flat doji. So in this kind of situation, the doji that happens here, this is dragonfly. So the doji that occurs here is a dragonfly, and the dragonfly that happen to be near the resistance level always reverse the market. If you go past and check, you will see that anytime you see a doji candlestick in this kind of, if you see this kind of doji candlestick at the resistance level, they reverse the market. If you can predict momentum, it depends on how the current of the market is now, right now. So you see that this is a level, this is support level, and this is resistance area. But we still have some minor resistance which can also the left side that can also affect the momentum. So if you want to predict momentum, I will not allow you to go with 10 candles to say you want to predict momentum. At least 3 candles, 4 candles, which you know that when you see a strong reversal point at the support, the market will continue to that level. For instance, if the candle got rejections from this level here, there's not going to be a momentum when they reach the level. But if the candle open immediately inside this area, completely, the whole body open here, the whole body closing price, the hedge and everything open completely inside this area, that is when you will see momentum. Just like this momentum, but you see the buyers become weak because of some barriers level here, this barrier. So it didn't allow the buyers to continue. So that is how you can trade doji candlestick effectively. So there are things that you need to put into considerations. And now, what do you expect to happen now? Because you see that buyers are entering the market, stopping at this level, but now they could not reach this level, and now sellers are entering the market. So you should know that there are two things that is going to happen here. As sellers, buyers could not reach this point before it reverse. That means when the market is reversing here, there's going to break this level. Maybe they are not going to reverse once they reach this level again. Then another thing is, if the market is just reversing continuously below, let me say below the support area, that's a sign the buyers is going to break the level, because we only see few sellers here, few sellers. We see few sellers here. Now market should cross the level now, because we are seeing few sellers, and sellers are not much that interested in the market. Okay, so market, you see that from the support, market will reverse, and here then sellers enter from the resistance. From the support, buyers enter continuously and reverse from the resistance. From the support, buyers entered and reverse. From the support, buyers entered and sellers reverse entered from the resistance. From support, market got rejection, sellers entered, but sellers become weak. From support here, the market reached this level, it got rejection, but still the buyers still enter. But you see that buyers did not reach this level before sellers enter. Now, when buyers enter continuously, you see that this candle was very strong, strong bullish candle with rejection from buyers. Now got a small rejection from sellers. It got a small rejection from sellers. Now, when it got the rejection from sellers, look at this candle now. What do you think is going to be the next candle? Remember the doji candlestick. Don't forget, this is a plus sign doji, and this doji candlestick is not same thing like this. This is a dragonfly. What do you think is going to be the next candle? Why red? It can't be red. This is a plus sign doji. This is a dragonfly. This dragonfly means a sign of reversal, because we can see the exhausted sellers, buyers entry here. This long wick, this long lower tail. That is a sign the buyers are exhausted. But here, both buyers and sellers just like spinning top. Both buyers and sellers are the same. So it's a continuation. That is a sign the seller is not going to enter the market. Means the market will continue going up. So it's a continuation sign, not a sign of reversal. It's green. Yes, the next candle should be green, because this is a plus sign doji. Now take note, if this doji comes to, and if this long, let me say gravestone doji, something like this. Sorry. If you see this kind of doji like this at the resistance level, even below the resistance level or inside this resistance area, market is going to reverse. That is a sign the buyers are exhausted. Same thing applicable to the support level. If you see a doji candlestick like this, or if you see a doji candlestick like this, market is going to reverse, meaning the sellers are exhausted. Strong network. Okay, so as I was saying, I think the network is somehow confused, is somehow disturbing us. So as I was saying, if you see this kind of candle or doji at the support area, market is going to reverse, because the sellers are exhausted. But here, the market will reverse because the buyers are. But here, both buyers and sellers are the same. It's a sign of continuation, meaning at this resistance, no sign of sellers. So buyers will enter on the next candle. Same thing applicable here. If you see this kind of doji at the support area, meaning there's no sign of buyers and sellers. So buyers and sellers are the same. The market is going to continue to the downside. But if you now see this kind of doji, like a long leg doji here, a long leg doji, something like this, a small body, then a long vertical body, a long vertical body more than the horizontal body. If you see this kind of situation at the support level, it's a sign the market will reverse. So it's different from this. The market will reverse when you see this kind of doji at the support level. Same thing applicable here. If you see a long leg doji, a, something like this, the market is going to reverse. but you see that this is a plus sign. Both upper and lower and sideways and side body, they are the same length. So I'm not saying you should go and use ruler to measure it, but you're able to know that they are the same length. You should be able to identify that, know that they are the same length. Market still come back again to retest the level, and that's why we see the buyer's entry again on the next candle. So I'm not using indicators today. So next class we're going to use indicator as trading support and resistance. But here now I'm not using indicator. That's why I don't make use of indicators. So now this is GBP JPY. What do you think the market is doing right now? You should know that first time you see the chart, you are now seeing the market is moving up. Okay, I think I should be able to ask you guys and let me know. Yes, it's trendy. Yes, the market is trendy. Before it was moving up and down, but now it's moving a sideways. But after the breakout, we now see some kind of trendy to the upside. So you should know how you identify the market structure before you start plotting out your support and resistance. So let's now start. I okay, first take this level now. I want to draw resistance. Previous resistance becomes support. This is how I will draw it here. Actually, from this highest week and any reversal point here. Make sure that this green candle opens inside. You know, this is a Marbosu. Marbosu that crossed the support area or resistance area reversed the market. Okay, so rejection, it reverse. You can also confirm from the left side. Rejection, it reverse. Rejections, it reverse. He also it reverse. He also it reverse. The reason why I draw the support, meaning that if market should come to this level, we should also take note that there's a support area here. So we should also take note. But now currently the market is moving in a trendy form. So this is how we draw the trend line using the trend line. Okay. So let me draw the resistance as well. And again, there are some things that you need to do if you have it sharp. You can also know that the upside is moving in the side in the same direction as well. So let me plot it out and let's see. Okay, I think this one here. Support area. Support area should be somewhere here. I want to make sure that all the red candle is inside here before the market reverse. So I'm drawing the second line in favor of this. I cannot do this because if I say I do this, this candle is below the line, the market still did not reverse. But I can say, okay, let me do it in favor of the last red candle to make sure that my area is drawn correctly. Okay, so this candle did not reverse because it's not inside the area. Let me just adjust it a little bit up. It did not reverse because it's not inside the area. Same thing happened here. No, it did not reverse because it's not inside the area, but here it reversed because inside the area. Here also it reversed because inside the area. So this is our good support area here. Now our resistance area now is this. So but currently we can see some minor resistance here. We can also draw the minor resistance here. Minor resistance here. But do it in favor of any reversal point that occur. Okay, I think here the market reverse here. See outside, inside these two lines, reverse here, it reverse here, it reverse here, it reverse. So that means we have our minor resistance level, major support, major resistance, minor resistance level. So we don't have the main minor support yet. Okay, we don't have the minor support yet. So these are our major resistance, our major support, minor resistance. Okay. So you see that this candle now quickly decide what is going to be the next candle. You see this candle, yeah, sellers enter from this level and now buyers again enter. So what should come to your mind now is that market is showing a sign that it's heading toward the next resistance level. This candle got rejection here, it reversed, and it reversed exactly at this point. Buyers entered here, but see, the candle reversed here, but the buyers quickly entered, meaning the buyers have shifted their entry. Meaning the buyers have shifted their entry from here to here. So the buyers are now here because buyers quickly entered here. So in this kind of situation, you should know that buyers are now heading to the major resistance. So if buyers now go to the major resistance, that is when the market should reverse. But take note of opening price and closing price of each candles. So take note of that. Watch out for the opening price and closing price of candles. Okay. Remember, this candle closed inside this area but not reverse. Again, this candle closed inside this area. What do you think is going to happen here? It's not going to reverse. It's heading toward this level. Okay, you should know that it's not going to reverse because buyers quickly entered here instead of here. Buyers quickly entered here. Buyers were here in the past. See buyers entry, buyers entry, buyers entry, buyers entry. Even some because of doji candlestick here, no sign of seller. That is why we see a bullish candle. But here, the buyers that are here, they now transfer their entries to here. That is very close to this resistance. That is the sign that the pressure of buyers is to push the price toward this level. Their pressure is to push the price toward this level. So even though this resistance area is not valid, that means the bias is going to continue to this level. Even there are some retracement. The market must retrace for some time. Market must retrace. And the market retrace, market will still continue. That is when the market is heading toward the level. Now take note of the candle that will close or that will cross the level before the reverse, or that will close at the level before the reverse. Is it a strong candle? Does it confirm that buyer is going to continue? Or is it a weak candle that will tell us that okay, market is going to continue? But watch out and see. Now you see that this candle closed here, unlike all the rest candle that closed inside this area that reverse, but there it did not reverse. You see again, buy still continue, buy still entered again when seller did not enter. Now this kind of candle means what? Having this upper wick, it means continuation, continuation to this level. It means continuation. Any continuation candle, this is how they form. Up, up to this extent, down. Maybe let's say for example, let me just draw it perfectly. Up, let me say come some kind of supply demand zone up to this extent, then reach this level, and maybe it retests the previous broken resistance to now become the support, meaning the market is going to continue. And that is this candles. That is what this candle is telling us about. So I think you can also confirm it on lower time frame, like 5 seconds. Let's check it out. Let's check it out and let's see. You can see what I said. Up, then some kind of uh, supply and demand zone consolidations. The market comes to that same point. It's not going to reverse. It closes exactly at where the opening price and the closing price is. So it's a continuation sign. The market is going to reverse. It's going to continue. And that is why we are seeing the next candle was a red, it was a green. Now, when the next candle formed green, what do you observe? The next candle formed green and did not form a strong green. It did not form a strong green. Remember, a doji candlestick, like I said, a doji candlestick is just like a spinning top. Doji candlestick that form same body, like plus sign, is just like a spinning top here, like indecision between both buyers and sellers. Come on, how strong it is. Network. Come on, come on. Okay, I think the network problem. So, like I said, a doji candlestick that form at the resistance area of support is going to continue. Some doji candlestick like this is going to continue. But check this out. Look at this is a spinning top, like it's just like indecision. And this spinning top, if you draw it out, if you draw the way it's seen here, that means we have a long wick here, starting from here, a long wick to this point here. Then we have the body here. Let me say the body should be here, here. What does this doji candlestick tells us about? Tells us about it's like a long leg doji candlestick. So it's not a doji candlestick like look like this, the same body, the same size, the same height, and the same width. But here, this one is very long, but the body size is weak. Let me show you the body size and both the horizontal level are the same. This is a long leg spinning top. That's a long leg doji candlestick. This is not the correct spinning top. Correct spinning top is like having, but they are still part of spinning top family. I think it's not easy to find here. Yes, this look like, yes, this is a correct spinning top. This is a correct spinning top. If you look at the length, the distance here and the distance here is almost the same. Distance here and distance here is almost the same. But go back to this, the distance here, the distance here and distance here is are not likely to be the same, but they are the same. They are almost the same, but they are not likely to be just like this, having a small horizontal vertical line, then a long something like this. It's not like a plus sign that have both the same shape. So in this kind of situation, that is a sign that buyers are weak after seeing a rejection from sellers. When buyers enter again, buyers have become weak. And when they become weak at this resistance, minor resistance. That is a sign the seller is going to enter the market. But currently is a sign, the this green candle is a sign. Previously, this green candle is a sign the market will continue. It continue to the upside, but this candle now spoiled everything. It become weak inside this area. That is why we see the market reverse from that level. So when sellers entered again, they continue to the downside and break the level, and we see some buyers entry after the breakout. After the breakout, don't say the market will continue in this kind of situation. If you want to be trading support and resistance, trade on support and resistance once the price is inside this area. Okay, major and major support, major resistance. That's how you should trade support and resistance. But don't trade support and resistance when you see some minor level. Okay, you'll be confused. So this can break the level. Don't say it break the support area, market will continue. Remember, we have the horizontal areas which the market have used in the past. So those areas are still valid. They still make the market to reverse the market. But when you see the price approach the support and resistance, yes, you can extend it. You can extend it. Like does this horizontal line. This horizontal line is being used. Come on, let's talk. Yes. Like it's just like this horizontal line. This horizontal line is used here, but if you check at the past, it's still used here. Assuming that this is where you use the horizontal line in the previously. But when price come to that same point, the market still reacts. So you can extend the trend line areas. Okay, you can extend the trend line areas. So it doesn't matter if the market is not going to reverse. Still have some minor level here, something like this. Plot out area, something like this. You can extend it to this level. This, I've never seen a reversal point here. A reversal, let me say, bearish candle like we have green to red. Green to red. I've never seen here. But psychologically, I'm just hoping if the sellers will enter here. That is why I draw the second line here. That's why I draw the trend line there. Is it the trend line or horizontal? Trend line or horizontal? You ask a question, can you extend trend line? You can extend it like this now. I've told you you can extend it to any area. You can extend it to any length. Either you use this this trend line here. You know, if you just draw it, it's just like a everlasting trend line that can be connected to anywhere. So either you can extend it. Okay, or do you mean to bring out the trend line to capture this one, to capture this reversal? Okay, if you want to bring out, that means they must be on the same level. They are not the same level here. They are not this reversal point. They are not the same level with this. They are not with the same level with these ones here. So this one are on the same level. What if, assuming that you see any level here? Let me say, if you connect it from here to here, you still capture the same point. From here, you still capture the same point. Okay, you still capture the same point. We extend it. Now, I have seen the green to red. That means I will extend the trend line from here to here. This one, so this. Okay. So this also is working at the support level, and that is why we see the market quickly make some U-turn here. Sellers still enter the market, buyers still enter the market. Remember, this is also a level. Now, how many level do you have here? You have one area, you have two here. So if this candle will close here, in between these two trend lines, or here, if it's still the same thing, the market is going to reverse. Okay, so that is how you trade support and resistance. You see this candle got rejections from this level, from this area here, and that is why we see buyers entry. And buyers enter to this level here, huge buyers entry, got rejection from sellers here. And when they got rejection from sellers, you see that they close inside this previous resistance support level, this second resistance. You can, if you don't want to be confused when drawing too much lines like this, you can color it. You can change the color so that you should be able to identify the type of resistance that the market should respect or not. Okay, so this is the previous level here. This is the previous level that was being broken out by sellers, and again the market comes to that support. But you see, when buyers enter, it close inside this level. But consider the strong buying pressure here. The strong buying pressure will assist on few number buyers. So if this candle will now close, if this candle will now close in between this area, it's gonna reverse. I want to make it to be something like this. Okay, let me delete these two lines. Let me draw it perfectly. The market should reverse now because it's inside the area and the candle is weak. Okay, I choose this one here. So let me clone it and simply drag it to this point. So, okay, so you see the buyers become weak with a strong rejection despite the market still reverse. So the buyers could not able to break this area here. They could not even succeed to break this support area here. Now the market is not going down. Now remember, if sellers break this area, you will see that there's going to be a momentum to this level. There's going to be a momentum to this level. Watch out. There's going to be a momentum. I think sellers has break the level now, but we still have some barriers. These are the barriers here. We still have some barriers here. going to be some rejections here. Rejections because this is previous support area. Buyers come to that same point and there must be some rejections. So there's going to be a momentum to this level because sellers are finally breaking out this area. It break out to the minor area and the major. So meaning the market will now continue to downside. So there's going to be a momentum to this level. This is the major level, which later become this was a previous resistance here and become support. So I think the momentum will continue to this level. So the market has already created pullbacks. May create a pullbacks. This is the pullback here. You can check that on lower time frame. You can see some bullish candle here on 5 seconds. See the market has already created pullback and now it's going heading towards the support area. You see that there's going to be a momentum to the support area. Okay, now we can see some momentum. Watch out for the barriers. The barriers might not allow the market to reach because they finally break these two horizontal and these two areas, major areas and major support areas and minor support area. This is now minor support area. This is the major support area. They finally break the two areas. There's going to be a momentum, meaning they got their liberation, they got their freedom after breaking the two areas. Now this is where they will respect. This is where they're going to rest. There's still some kind of barriers like this barrier here, like this barrier here. It might disturb the market not to reverse like all these barriers. Okay, it might cause the market to reverse for 1 minute, or it might cause the market not to reach this point. But this is where the sellers will continue the momentum to this level. So I don't think buyers should enter here because we have some reversals here. Reverse, okay, we have some SNL level. I think the market reverse. We have some supply and demand zone here. Assuming that there's no supply and demand zone, the momentum will continue to this level. If you see this is the major supply and demand zone where the market is going to change direction. This is the major supply and demand zone. This is the minor supply and demand zone here. But if you want to be trading and you observe the minor supply and demand zone, you can enter your trade with some margin of safety, allow the price to go up, and then you place your trade with a put option. You still want the trade, but try to go with sellers continuously. If the market did not reverse, did not reach this level after breaking this barrier level, this is where they are now heading to. So because of supply and demand zone here, momentum always respects supply and demand zone. So when they respect supply and demand zone, they're going to reverse for 1 minute. But you can still enter with a margin of safety here because this is minor supply and demand zone. This is major supply and demand zone. Okay. So sellers will still enter continuously to this level. There are some leftover buyers and the buyers are exhausted. That's why we see this long wick, this long lower wick here. Now take note that okay, we have um mini we have okay, this is not a red candle. I was expecting a red candle here. Okay, I'm expecting a red candle here. I'm expecting a red candle here. So there's one thing I want to show you. We have mini support here. Mini support. We also have mini resistance. So if the market break the mini support, they are heading toward this level. If the market break the mini resistance, they meaning that they are not going to reach this level again. So there are still some, yes, there's a round number. That is why we see these rejections. So there are still some buyers left here at this SNL, at this supply and demand zone. That's why I see some buyers. But this is where the downtrend will continue and reach. Okay, they break the mini support level. They break the mini support level, so sellers will go more down. But you see this kind of candle, I don't like seeing this kind of candle here. So what I like to see is small red candle close here, another candle close here, like two or three candles. But you see this strong candle, I don't like it. Now it now reached at the major supply and demand zone. Major supply and demand zone. Let me show you. Don't be confused. Major supply and demand zone. Supply S, supply S, demand D, demand D. So supply and demand zone. Just like sellers and buyers. Yes, exhausted. They are exhausted. So they reach at the supply. Even though momentum, strong momentum, it will still respect the supply and demand zone. So we have some consolidations here. Now the market now is heading to the consolidation level. So there are two things the market is going to do. Buyers will continue to this level and reverse. That's what the market is going to do now. Buyers will continue to this level and reverse. It's just like downtrend, up, consolidations, then downtrend again. When the market will reverse, it will create near second top. It will create the second top to continue to the downside. Just like if it's going to create head and shoulder patterns. So I think from here, when the market reverse here, and once it's heading to this point, once you come back again to the same level here, or maybe say a little bit below, or let me say a little bit very close to this level, it's going to create head and shoulder pattern before the market will change the direction to the upside. So like what I'm seeing here is forming something like head and shoulder pattern. The market will still continue to this level. It's forming like head and shoulder pattern. Like this is the fourth shoulder, this is the head. So the market should come to this level and reverse. It might go back and take and respect this level again by forming the second shoulder. That is when we see another uptrend forming. Then take note when another uptrend is forming, we still have you can still extend these trend lines. You can still extend these trend lines. Extend the trend lines here. So if the market form head and shoulder patterns here, the inverse head and shoulder pattern, four shoulder head, four shoulder head, and so second shoulder here. Once the market will break the neckline, it will continue to this level. They might still respect the level a little bit. Let me say just if the sellers are weak, they might continue to the major level, and then we see a boom to the downside. So that is what I'm expecting now. But you see, sellers are still very more powerful than buyers. Now, if the market did not want to create head and shoulder pattern, I think they're going to create double bottom. If the market did not create double bottom, they're going to create triple bottom. So just expect any patterns here to occur here before you see a strong buyer's entries to the upside. Now we can see momentum here of sellers. That means if the market form any patterns here, there's going to be momentum also to the upside. So we have inverse head and shoulder pattern, something like first shoulder, head. I think this one's going to be second shoulder, second shoulder. So I think the market should go up now. Then they will break this neckline first. Or let me say the neckline should be uh, should be something like this. Okay, this one, first shoulder, head, second shoulder. So they will now break the trend line, continue in momentum. So just watch if the buyers break this trend line, it's going to continue. So when you are trading all this pattern, it doesn't mean that head and shoulder pattern should be a correct one. Like seeing head and shoulder pattern, something like neckline, a downtrend, first shoulder, reverse the market, head, reverse the market, then second shoulder. It doesn't matter. It doesn't mean that it's not compulsory the market should be on the same level. It might be the second shoulder should be somewhere here. It might be the second shoulder be somewhere here. So just expect the market to reverse at any point before you create the second shoulder. So if buyers now break this line, the market is going to continue. Now you see it's very close to this support area, and which I'm expecting second second shoulder here. So I'm expecting second shoulder here. So I think this will be our last, but let's see what's going to happen here. This will be our last explanation. So next class, I'm going to explain more about the indicators, how to use indicators, support and resistance, or support and resistance. Again, the buyers did not form a strong green. That is what the market always do. I think the market should form got rejection from this support and reverse. But you see, buyers did not form a strong green, not even showing the sign the market is going to break this level, this trend line. So let's see, let's wait and see. So I just want to see if buyers will break this line. If you see momentum will continue to this level. Can you tell me the reason why we are seeing this bullish candle here? The reason why we are seeing this bullish candle is because it's very close to the support. If sellers will enter, this support area will allow buyers to enter again and no rejection. So market, I think now market should break it. Now watch how the candle will break the level. You will see that once they break the level, they will form strong, just like a strong green candle rapidly, very strong, like happy, like when they're happy. And that is what happened here. You can see the candle is becoming more stronger because they finally break this trend line area. So I think the momentum should continue to this. If sellers become weak, this should continue to this before we now see a drop. But the momentum, I don't think the momentum is going to form four green or three or five. But what I'm seeing now is like it's going to form green, three green, three red, and three green. Not five, not four. I don't think so. Except this candle will form a small green candle. The seller still entered again because of this. There are some leftover sellers here. Sellers still entered again. Just like making some pullbacks. Making some pullbacks to this area. Now you see buyers break the level, sellers entered very strongly, even engulfing this candle. If you are a forex trader, if you observe all these kind of tricks here, you will know that this is a false breakout. This is a false breakout. when you draw support and resistance and you see that this candle that break the level is very strong, next candle form a strong red, very strong red, even engulfing the previous green candle. That is a first breakout. So when you see this kind of first breakout, this is what we this level are where we call are what we call liquidity area. This level are what we call liquidity area. When we mean by liquidity, it means the leftover cash that are left here, the leftover cash. And these are the leftover cash that once price comes to the point, it must be a reversal point. So, but this candle break this area and it capture the whole area. This red green candle capture the whole area. As it capture the whole liquidity area, that is a sign the market is going to continue to the downside. Now, market should not go more down. Market should not go more down. That is why we see sellers enter because this candle capture the whole liquidity zone here, capture all the low liquidity zone. So that is why we see a strong red candle. Now, sellers should go more down. This is the next support area they can be expecting the market to reverse. So this is a false breakout, not a real breakout. If this candle will close as doji, remember the kind of doji candlestick that will form at this support level before you can identify because before you can decide the next candle. Or remember the type of candle that will form here before you can decide the next candle. Make sure that the candle that will form here will be a weak candle, a weak bearish candle to consider buyer's entry. Or if you are seeing continuously buyer's entry and seller's entry to seller's entry at the buyer's area, no, this is a buyer's area, support zone. If you are seeing continuously seller's entry at the support zone, that is a sign the market is not ready to respect the level. So they're going to break the level and continue to this level. So this is a first breakout instead of continue to this level, but this is a first breakout. The candle capture the whole liquidity area. If you want to know about this setup in trading forex, it's very common, it's very necessary, very much important to know about liquidity and supply and demand zone when you are trading forex. Same thing in binary option. So if you know that, you should know how to capture, how to trade successfully. Buyers now rise up again from this point. Rise up again, close above this high. I think then buyers should continue. So we can't count this as a first breakout. We can't count this as a first breakout. Breakout, exhausted candle. So we can't count this one as a first breakout. Buyers entered very strongly from the support, then the market should continue. Remember, we are still in head and shoulder pattern. Sorry, head and shoulder pattern. Yes, head and shoulder pattern. First shoulder, the head, second shoulder, and the neckline. This is the neckline. This is first breakout that captured the whole liquidity at this area. Now, when we see a breakout here, the second shoulder, the market now should continue. But you see this candle very strong too. Remember, we still have some areas here, but I don't expect the sellers to enter the buyers will still continue to this level. So buyers should continue to that level. And let me extend it so you will know when sellers will enter, so that we know when sellers will enter. If market reach this level, then we stop. Still have some resistance here. So see market reverse, but I don't expect sellers to enter here because this is where buyers enter very strongly. And this is the target. This is where the buyers are aiming. This is their aim level. So we shouldn't expect the market to reverse here. Though this is a barrier level, but this candle cannot be a sign of reversal. It's not a sign of reversal here. But this is the market, this is the area the market is going to reverse. So let me cross check it and draw the level very well so that I won't make a mistake here. Make sure that this weak candle is above these lines we draw before you see the seller center. You got rejections, still far away from the level. I think the buyer should enter again. Okay, it's now respecting, it's now going to retest this level. Okay, very slack, very strong. See, I've drawn so many lines on the chart. Just I just want to explain to you, but if I didn't draw any lines to explain, you won't understand. So that's why I'm just drawing lines, too much lines. Got rejection, then reverse. But next candle is supposed to be bullish here. I think this is just like a retracement where we see buyers continuously, then sellers retrace again, the market should continue again, retrace, I think something like this. That is what the market want to do now. But remember, this is also a barrier. If buyers break this area, they're going to continue. Remember, if buyers now break the area, reach this level, I don't think the market should reverse. Buyers will still continue like this. So the market pullbacks here make some retracement because of this level. So assuming that the market is just moving straight, it will not make some pullback. So it makes some pullback here because of this level. And look at the momentum. The momentum is the volume of the candle is weak. Though we have the volume here is showing us a strong volatility of buyers in the market. But look at the candle body size. The size of the candle is very weak. So they were becoming more stronger here, but now they become weaker. Yeah, so I don't think the buyers will continue sellers enter. Okay. So now when sellers enter, buyers again still get rejection from this area. So that's why you need to take note of all this area. Market might that is why you see the place called market will go down. You will still be surprised that what happened? This is where market should reverse. This is where market should continue. But the place called market reverse. That is why we see these rejections. And now this candle is very exhausted, but you see that sellers again enter very strongly. I think there's no buyer's entry now. And this is what I'm expecting to happen. Up, down, up. But you see no buyer's entries. No buyer's entries here. And sellers enter very strongly. Now, as sellers enter very strongly, the buyer's momentum that will start here will mean that no invalid of buyers here. So that means the market is going to form a downtrend, something like this, the downside. So remember this area of support. The first time they reach this level, they reverse. Second time, we see so many weak rare sellers candle. Then before the market reverse, like a spinning top candle that reverse here. You see bullish candles, it didn't reverse immediately. But when we see spinning top, it reverse. But here, this one look like a doji candle, but still, let me say a small spinning top. That is when the market now reverse. So when the market reverse, market still come to that same point. So it's not going to reverse. It must reverse because this is the previous levels, previous support area. That is why we see the bullish candle. Okay. So I think we should stop here for today. I've give us some explanation. There are things that you need to watch out for when you are trading. Body of the candle size, the size of the candle that form towards an area of support and resistance. This will help you to determine the loss of momentum. So if the market, the buyers or seller lose momentum, then you should know when market will reverse or not. So that is how you can trade support and resistance effectively. So you wait for a price to come to this area, you place your trade. Wait for a price to come to this area, you place your trade. Wait for a price to come to this, you can still be extending it. Wait for a price to come to this area, you place your trade. Or here, you place your trade. Or here, you place your trade. Or here. If the market is still going up, you can place your trade continuously. Or here, wait for the price to come to this area, you place your trade. That is how to trade support and resistance. If you trade like this for 1 month, let me tell you, if you are good in it, trading like this for 1 month, you'll be perfect in trading support and resistance even without checking, drawing anything. You just be drawing support. You just be trading without drawing support and resistance, without drawing any lines. See, there's so many lines here, but I just wish to show you these lines to explain deeply how you can trade support and resistance. Price are still going up very strong. You see, they escaped this area. This is where they are heading to now. This is where they are heading to. Okay, so guys, I think I should stop here for today. So next week we're going to talk about how to use moving average, how to use moving average to trade support and resistance area, even some other indicators, how to use them to trade support and resistance. So I'm going to show us to how we will do that on next week. So guys, see you next week. Have a nice day and have a nice weekend. Happy Merry Christmas in advance to you all.
Thank you so much.
All right.
Thank you.